Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Vicino. Little under the weather this afternoon, dealing with a migraine, so it's going to be a shorter than usual live stream, but I still am here. So, good afternoon, Davey. Good afternoon, Patrick. Hey, Gary, glad you're here. George, thank you for being here. Good evening, Anissa. Hey, Josh. So you don't bet on the markets, George. Hello, hello, hello. You trade the markets. You don't bet on the markets. There you go. So let's just get to a recap of today. I thought today's actual price action was pretty decent compared to what the Treasury market and dollar index did. Stocks actually held up fairly decently. Hello, Amadeus. Hello, Sterling. So, we retested the Friday lows. By the way, the Dallas Fed Manufacturing Index, this was horrible. If you look at the report and everything, it was absolutely atrocious. And then we had all the Fed speakies just reinforcing that they're not budging anytime soon. Actually, your mega caps held up the indices pretty well. You see here, Microsoft down a little, but Microsoft and Apple pretty much an offset, even though Apple's a little more awaited. Google down a little, but Amazon and Tesla both pretty strong. Tesla pulling back into the close. Oil still suffering. Costco that was a nice little bounce today after holding a 62.5%. FOMC still 70% on the 75 basis hike, still a negative gamma. Don't need to instill fear and greed down where we could see a potential bottom. We do have buy setups for tomorrow. So, by the way, just for completeness sake, no earnings after close. All right. Just to get it out of the way, a close above today's high is a buy signal. So an intraday break above today's high is definitely tradable. I just left these on here. I updated them a bit, but you can see how well, again, even off those single candle harmonics before updating. 50 to 62.5, really pay attention. This even holds up with single candle harmonics on a wide range candle. Only on a wide range candle. If you want a metric of a wide range candle, at least has to be 1.5 times the ATR, and that would at least be a 5-day ATR. Little channeling move spiking up there and rolling back down. So this little peak from today's high is going to be key. Also remember that little pausing bar in the 4-hour clear path move. That was one of the targets. Making this flag pattern. What am I talking about overall before we get into everything? The notes just got shellacked, by the way. This potential double, which never even confirmed or triggered. Notes just got absolutely brutalized. That's why I'm saying the market held up pretty well. Now, it was supported by not the broad market, but by the mega caps. But this kind of price action in the notes, this is a major day. I'm starting to watch for potential capitulation move in the notes at this point. I'll give you, I worked out some numbers. I'll give you some capitulation stuff to watch for. Remember, tomorrow could be turnaround Tuesday. We still have potential buy setups. VIX coming up here. Not quite that 87.5, but edging in on it after the gap fill. So the gap fill and then the edging in on it. Still keeping an eye. The only thing I'm also watching, this is still a potential double top. This is a potential double top. So if we do get this to trigger, then I will start watching, especially for a slightly longer bounce move. Slightly longer bounce move in there. Also, considering what the dollar did today, By the way, dollar index also has a double top. It did also had the little double bottom that did trigger and hit the first target. But the double top is potential also. So I am, even if we push up to tackle the highs back from last night, then it's still a potential double top. Keep that in mind. If this also triggers, this would be a pretty bullish, short-term bullish for the stocks, not these stocks. So that's what I'm watching here. And when I talk about stuff with the yields and everything else, I mean the 2 years, the 2 years retesting this high area, 4.3445. By the way, this, even with this hitch in it, this is a double topping pattern on the little 1 hour. And on the 4 hour, you can see it here. That doesn't mean we're going to get the reversal. It's just something I'm keeping an eye on. And with your 10-year yields, look at this. 3.93. This is just a massive move. So I'm starting to watch for a capitulation move, at least a short-term capitulation move in some of the treasuries. To give you an example, since I've been getting this question repeatedly, I'm going to show you some stuff on a closing basis. To give you an example, remember I talked yesterday about 1 or 2 day capitulations. 2 day meaning you have to close down pretty much near the lows or below a very key point and then reverse the next day, but a close below that very key point. The close below that key point is now below 3,500. And what's interesting enough is that doesn't relate to these clusters, but if we did get a close down by these clusters this week, that would most likely fit into a potential 2 day capitulation move. A 1 day capitulation move, we'd at least need a move down, and this level will change, but tomorrow we'd at least need a move down below this 3550 area and then an up close. So it doesn't have to go as far, but it have to trade below this level and then have a green close. All right. And on a closing basis, it would have to be below 3,500. So you'd have to get a major push down move and a close below 3,500. So those are some examples of your capitulation potential bottoms. Does that have to happen? Why I'm bringing that up is still breadth does stink. All right. Do we have to have those? No, but I've been asked so many times, I thought I'd show you what kind of levels we'd need to hit to get those kind of capitulation move, and it is rare. So, let's see. Yeah, I covered that. The 1 and the 4 hour. Thanks for bringing that up in case I missed something. Yes, there is a potential VIX double top on the VIX. So that's what we'll be watching to confirm a stronger bounce. Yeah, just report it as spam. It's just ridiculous at this point. There's no value add, and that goes to any if something or a bot or somebody just keeps showing up that's no value add. I just don't have the patience or time for it. If somebody actually wants to learn and have a sensible discussion, and I don't care if you're bearish or bullish, I can have a sensible discussion. But just the blindly repeating stuff, just like some of the stuff with the penny stocks and the IPOs with NASCAR all out. It's just the same thing every day. When that shows up, it's silly because there's no point in engaging with it. Not seeing a double top in what? On to trade. Remember, there is a double top in the VIX. This is completely This is a potential double top. Does that have to trigger? No. Newer people, this is a potential. On an increased VIX move, this could get wiped out. It's only confirmed if you get the VIX dropping below these lows, 29.62, and it's only triggered on a closing basis below those, and I need at least a 1 hour close. A potential does not mean anything but a potential. I need like a list of, I need a cheat sheet for people to review things because you have a potential setup. For example, we have a potential buy setup on a close above today's high in the S&P. Could we tank tomorrow and never trigger that? Yes. It's just a potential setup. Trading is a bunch of potentialities and probabilities. Potentialities never have to materialize. They're just potentialities. Now, that same thing, if you got a strong rally tomorrow and you intraday above the high, yes, that could be a front run pattern, especially on a break and a retest where a retest holds, and then it can get carried into a longer short-term trade on a close above that. Could we wipe out that trade overnight? Yeah, theoretically. Well, it wouldn't wipe out that trade. It would just take it to levels where that probably won't trigger. Just like there was a potential for on a daily close above Friday's high, which was the probabilities were very low, and we didn't even get anywhere close. We couldn't even get on the single bar harmonics above the 62.5, which I talked about was the first bullish sign. We didn't even get there. We got between the 50 and the 62.5 and rolled over. So because you have potentialities either to the long or the short side, they don't have to materialize. All right. Key levels, if we break low, remember now we got harmonics, June lows, and we have reinforcing harmonics. So on a breakdown, key area I'm watching is the June lows at this point, reinforced by harmonics. This market, again, I'll restate, based off the dollar index and the Treasury market, did hold up pretty well. Yes, it was still a red day, but it could have been a lot worse. Now, the breadth and the market internals still suck. That's why I'm also bringing up capitulation, because it's still on the table. Nothing is firmed up yet. So, little thing you can keep an eye on is this this peak going into the Asian and European session. This 36.97 peak. A close back above that, I'd be still targeting the return to the upper end of this channeling flag that it broke down but held Friday's lows. So that's the little thing I'm just watching going European and Asian. And you see this, here are the lows back from June. And I'm having on the reverse harmonics. These are the little short-term harmonics. So that's a minor level for stop reductions for shorts is 36.51.50, and then the majors right at the June lows. If we do break below that, nothing else has really changed with the other harmonics. And by the way, this is now the longest pausing area we have. You see here, so don't update them to here. This is the pausing area. The next targets would be 36.25, then 35.91. Rich, we'll take a look at nat gas, but just because it closes at a key level, that's not a buy signal for me. Remember, it could go lower. You need a buy pattern. For example, I'll get to that in a second, but on the S&P, remember we have the 200 week down at this key harmonic area. If we close there tomorrow, do we just blindly buy the S&P? No. Has it hit a key level? Yes. We'd still need a buy entry. Just because you hit a key level, even major support does not just make it a buy entry. For me, at least. because you might not bounce there. For another example, it's we've tapped again. We're getting in the area of the 200 simple. Is this a buy on the Nasdaq yet? No. Is it a buy on the Nasdaq? And this again, when I'm talking about buy patterns right now, they are very aggressive. Why are they very aggressive? Because they can only lead to short-term bounces. Could you then roll it into, like, remember we got a aggressive buy pattern in June that rolled into a bigger ramp up? Yes. But probability wise, the buy patterns are for right now a return to the daily rotation zone, which is not that far off. So they can only be, that's why you have to be very nimble if you're trying to buy. Could it turn into something a little more aggressive, especially with fear and greed being at 18%? Yes, it can. So if you're doing a buy pattern, you have to aggressively move up your levels. I mean, your stops. So if you look at Natty Gas, now on, just because you got a green bar, this wouldn't be the close. Now, if we get a break above today's high, and you can't just say winter's coming to Europe, yes. But you can't, stuff can keep going against a macro or a fundamental trend for a while. You do have now this would be an aggressive buy in Natty Gas. Why is it an aggressive buy? Not only has it triggered a significant topping pattern, it's against the daily rotation zone. So on a close above today's high, it would be a buy. What would be target areas for setting up a trade? It would be a return to the breakdown area and the trigger point of the double top pattern, and a return to the same vicinity, the rotation zone. So yes, from my perspective, even with this green candle close, I need more confirmation, not just, hey, we got in the vicinity of the 200 and we got near the first target. And it could run a little because you have daily cycles at the bottom. Back to the Nasdaq. So on a close above today's high, yes. Nasdaq, I back for capitulation stuff, we'd at a bare minimum have to be on a closing basis below 10,750 on a closing basis. That's good enough for government work. That's where we sit right there. You want to watch something before then for a little earlier break for European and Asian sessions. I am keeping an eye on this little 1 hour high right here, 11,407. It doesn't quite squeak. It would just be, and the interesting thing is this is a clear path move within a corrective pattern, and you, even if you're trying to trade this as a double, it's essentially the same target for the second one. So anything on this, I would still use this as a stop reduction, and then the full target would be this right in front of 11.5. That's why I'm going to leave it on here. It doesn't technically qualify on the 1 hour. The 15-minute, it does, but it's a little sloppy. But since it's the same target going into a clear path move, that's the key area I'm watching for this to hold into the overnight session. The Dow breaking back down. I just put on the reverse harmonics, and it gave me 29,262, and we just bounced off of there. There's no double on this one, though. You can just watch this peak from 2 o'clock. We now break down. Now this is where we transfer to the forward harmonics. So if on a sell-off, 29,100 to about 29,65 area is my first key target. Russell, you can see I was doing a number of things today, but we had the short-term little harmonics. Yes, On the Russell, this is something else to watch for. This one's actually pretty decent formed. I'm going to put on the conservative ones, but that's to watch for into a clear path move on the Russell and even on the 1 hour, which you can still see it here. That's the key thing. So it would be on the close above the 1,675.10, and that's giving your targets into that clear path move. So there are a couple other potential front run patterns. Still a falling knife. This isn't really a falling knife. This was more of a consolidation day, but it gave us potential, as I just went through, potential buy setups. Crystal, when did what start? The live stream or what's when you guys when everyone puts in questions, I need a little more context. Hey Paul, welcome, welcome, welcome. So I appreciate all the comments. I just need some context. So because I get back to the comments as I'm doing some analysis and I jump back. Looks like Meta just broke below the pre-pandemic lows from Feb 2020. What are your about short? We'll take a look at Meta in a second. Why is it a buy above today's high? This would be above today's high. This is using the modified %B. It's using a modified Bollinger Band setup pattern. That's why. And if you look, again, it's a return to the rotation zone. And here's another thing you got to watch for. Yes, it can. You can, and any of these can turn into a larger bounce based off of where we are in the markets, especially if these key lows hold on a closing basis. However, on any bounce, you have to, if you just take a look at some of this price action, let me clear up the chart here. What is this area here? This was, all right, so this was resistance. Now it was multiple tested support. Now it's back to resistance with the declining rotation zone. So on any bounce, not only has to work through this, it has to work through all this consolidation period from before, back in July. Then, what do you have here? You had resistance, retest the support area, retest the support area. You can see retest, now resistance. So you have all in the top of the rotation zone. So that's why I'm saying these bounce plays, they can be traded. However, it's aggressively to move up a stop. Why? There are multiple stopping points and a lot of resistance to work through. What else? Let's just then I'll get to some stocks. DAX, there's an aggressive buy above today's high on a closing basis. DAX holding the holding key support and the harmonic. If it does break down through here, there's a actual key harmonic right below there, 12,132, but below there, the next key support is until 11,966. Notes, there's just nothing yet. I would not step in front of this freight train. I am watching for, though, a capitulation move in notes. Nothing to talk about. We already looked at the dollar index. We got the potential double or the confirmed double bottom that's hit already stop production and a potential double top, which you need a trade below this low to confirm it. 112.91. We already looked at the VIX. Crude retesting and breaking the low areas. I was talking to Bob earlier today and about how much both of us got crap saying there was no way Crude was going to hit even that first target on the double top, and it hit the first target on the double top. It's what you don't know. Even though it didn't, there's no way, it still hit it. By the way, 82 is now key resistance on there. And the next target is 69.87. I'd go with 70. 70 to 71 is my next target zone. But this would be lowering stop on any shorts. This is still oversold and at the bottom, and you got hurricane coming into the Gulf. I am watching. So this would be if you're short-term short, aggressively move down the stops. Longer term, you're going to leave wider stops. If you're looking for a bottoming play, a close above today's high is a confirmed buy, but it would be again tight because your key resistance is coming in at 82. And then your next key resistance 85. So the target area has to be between 82 and 85. Keep an eye. This is getting interesting also. Remember, we had the intervention back on the 22nd, and it's already, look at this. Intervention didn't even last a couple days. Yes, we had a weekend in there, but a couple trading days. So this is going to get very interesting with the Bank of Japan. Euro, we got the bounce earlier, but then the retracement of that. Based off your harmonics, we should see a larger retest of this bottoming. So we should see a retest of this bottom area. So I'm not doing anything yet to see how that plays out. Bitcoin, actually, that was a pretty decent bounce. By the way, the double is still in play. It has not confirmed yet. Long term, for anybody new here, I am very bearish. We should see a rollover play. This would just be a short-term bounce play. Now let's get to some stocks. Meta, hitting the next harmonic pretty much with the close. You see how much. Well, longer term, I am looking for some bottoming, longer term bottoming price action in Meta. But nothing yet. Meta, interesting enough, is at a pretty key support area. But again, not standing in front of this thing. Why? There's better things to look for bottomings in, especially PE's coming back down, getting into more of a decent area. Wiping out what's interesting from the COVID lows. Remember, we got that close below the 62.5, and we've already gone full circle with that. We've actually gone full circle for this other thing. The next major stuff I'm watching for in Meta, then I'll get to the specific question. Remember, the next key major area I'm watching for is about 109. We could, before this bear market's over, we could see 100 to 109. I really doubt we hit the 87.5. When you get to these super long ones, the probabilities break down a little more. What was the question on Meta? It looks like Meta just broke below the pre-pandemic close from Feb 2020. Our thoughts are long or short term. I will watch for a bounce. We don't have a long-term buy pattern yet. Any bounce would be a return to about 155 area. So this would be a tradable bounce, especially if we get stuff running in on a bottom. If you want an aggressive trade, let's say we got stuff running in on a bottom, it would be a close above today's high. But let's see, my targets then would be that 150, mid 155s as a first target, or at least stop reduction. And again, longer term, still expecting it to hit this 110, 100 to 110 after we get some bounce plays. I saw there's a question from Sterling on Tesla. In Tesla, it had a 1 hour close above 62.5% retracement of the gap fill from today's 22nd. Since the close above the 62.5 didn't happen the same day as the gap down, how does it affect the probabilities? The probabilities are slightly lower, but it still does favor a gap fill. It still does favor a gap fill to this gap. So it's just waiting for, we finally did get that bounce off the 87.5. So yes, we should still see a gap fill now. If we break below, if we start breaking below the most recent support, that gap fill starts diminishing quickly. I would only play it on an intraday break though. Back up. I would not be trying to swing trade that gap fill. Snowflake broke your channel. Okay, you broke. Oh boy, the lines keep getting messed up here. By the way, Snowflake triggered the double top. I'd be watching also if you're a shorter term player for that gap fill, but I'm watching for the longer term for a retest of these key low areas based off of this daily close. So any rallies, I'd be looking personally for sell patterns. Now we are getting oversold, so I would not be surprised to see a rally, but rallies would be used to set up short positions unless this pattern gets invalidated. Hey, Mike, it's been mentioned that September usually is the worst month of the year. What about next month? Are there any nuances to be aware of? Either a way off all price action. Yes, September is historically the worst month for stocks of the year for stocks only. October is one of the most volatile months. October is also a month to watch for lows going into year end. So those are the keys in October. Volatility and potential lows going into year end. Does that mean you have to? No, but the probabilities are pretty high that if you get at least a significant low for a run up into year end. How long that lasts is variable and can vary substantially year to year. And we are not in a normal year, so I would not be counting on normal price action where you just buy, you find a key low in October, you get confirmation of it, and then it's just, okay, I can put on a trade. I can buy the spiders or the Qs or something and just ride it, through December. It's not a year to just blindly do that. It's never a year to just blindly do it, but it's a lot easier a lot of years where you can just buy something and just ratchet up your stops on a weekly basis. This year is not the year to do that. This is if you're going to try to buy the October low, you have to manage your stops a little closer. Why is crude oil tanking hard? Recession fears. That's why. Now remember, we got an OPEC meeting coming up in the beginning of October. They'll probably start jawboning it about cuts. All right. But crude oil is turning into a recession trade because naturally, when you have a significant, and I'm not just talking a U.S. recession, a significant global recession, crude pulls back substantially. The fly in the ointment with that is you still have the Russia-Ukraine situation, and you have your whole energy complex. But normally, we'd probably even be seeing crude tank more. But that's why it's still getting hit. Now, it starts getting hit much more. We're going to start seeing some jawboning going into the OPEC meeting. And jawboning, I mean, hey, we're considering cuts. We're looking at cuts. We're looking at this. We're looking at that to try to prop the oil market back up a bit. It's 150 is going to be rare. You're going to need a pretty substantial global macro event. Not saying it couldn't happen, but it would take some major macro event, and not just winter, to trigger crude to 150. That's pretty funny, Christoph. Will not ask if the low is in. I already went through the potential buy setups. You're welcome, Paul. You're welcome, Legion. Are you still here? Where was it? Where was it? Where was that comment? Christo, are you still here? I didn't get clarification on your comment. What else? What else? What else? Let's just look because the mega caps held up. Then I'm gonna call it a day. URA is still. That's why we'll get to URA in a second. Apple. By the way, this is not a potential double bottom. Just pay attention to the 62.5 level. A front run would be a break above. If we get a bullish Nasdaq and S&P, a break above today's high would be an aggressive front run, short-term bottoming pattern, but nothing other than that. URA. This is what URA. I would not be buying anything yet. The next buy is back between the 87 and 100 for trading around the core position. URA is going to take time. That's why you got to trade it around the core position. But this is the buy zone again down here. It's gotten very oversold. You got cycles at the bottom. Unless you are already out and looking for an aggressive re-entry, would be a close above today's high with cycles at the bottom overbought. And then I'd be unwinding some of it into the gap fill. I think I did a crazy classroom on trading around the core position. Could somebody verify that for me? Could somebody just glance at the YouTube channel or open it up in another window and search for Clay? I think I did a crazy classroom on trading around the core position. NNDM. Where do you... I haven't looked at this obviously in a long time. Where do you guys find these stocks? Ugh. You start getting a break above 250, you got a potential rebound pattern. That's about it. You already returned to the 87.5, so that's done. So anywhere in here you could find a more substantial bottom, but this is, nano dimensions. I hate trading stuff like this. That's the only thing I'd be watching for is if you get a momentum break intraday above 250, especially with the retest, then I'd be targeting this key level right here if you had to trade it to the upside. Other than that, it would be looking for a different bottoming pattern in this area. Financial advisor left me with this one. You had a financial advisor put you in this? I'm glad you left, that we broke up. I'm glad you broke up. This is not a stock you want to be put in by a financial advisor. I don't even know your entry level, but if it's much... ugh. Ugh. Why? Why? This is why I'm sorry, but most financial advisors don't know their ass from a hot rock. This is not. This is a purely speculative stock. This is like for taking a small portion of your portfolio that would be like gambling. This is money all right, if you're not taking the trip to Vegas and you want to, You want to play in the markets? Fine. Take a portion of that and put it on something like this on a breakout move only. Other than that, this is not a financial advisor. This is not a portfolio stock. Crap. Come on, man. It's not even a good growth stock. You know, I'll look right here. So if your financial advisor is putting you in stuff without a PE ratio and a negative earnings per share, find a new one unless they are putting you in a solid growth stock that has increasing earnings quarter over quarter and a solid business model. I'll tell you. And if you got a chart like this and you got EPS of nothing and price to P to E of nothing and EPS negative, and you look at a chart and it looks like this, fire your friggin' financial advisor. Most of them are complete garbage. They're salesmen. I put them. You know what? I've met some better used car salesmen than financial advisors. Sorry, that's a pet. It's utter crap. URA, that's why. Did somebody look to see if I had a crazy class? I think I do. URA is a great thing. It's going to be a long-term play, though. So that's why I like to unwind it into the things. Hey, Legion, what do you mentioned that the volatility typically goes up next month? Is that because people sell small caps to go through large caps to prepare for the holiday season? No, it's not. It's just because you get the remnants of September pushing down into October. You've had some major events, economic events happen, spill over from September into October. You've had, again, what's famous, you have Black Monday in October. You've got anchored volatility. And then you get a lot of times bottom callings. So if you're getting major volatility moves and people trying to rotate in for year-end plays, you get the amplified volatility. It doesn't really have much with small caps going into large caps. Just like, why September the worst month? Don't know. Because people normally think October is the worst month, but it's September. Do I know why September's? No, and that's why. See, if you go through the hierarchy of questions I've talked about, don't worry about why. Just go off the probabilities and the stats. So go into October. We can watch for a potential bottoming play. We can watch for increased volatility. And increased volatility means to the up and downside. It doesn't just mean one direction. And don't overthink it. Don't overthink it. That's why we follow price action. Because at the end of the day, you could theoretically have September be the best month of the year, even though probability-wise it's not. But there's not 100% probability. So you still have to follow the price action. I don't know what else. I think that's about it. All right. So I did not get confirmation. I'll have to look, but to do the search for trading around a core position, I think it's on a crazy classroom. And then you can ask some more questions. What I like to do is use especially retracement harmonics. Yeah, there's a small video on it. There is a video up there. I've tried to provide the basics for free. I like to use key harmonic levels. And then I fine tune it with price action. With that, I will chat with everyone tomorrow morning. Everybody have a fantastic night. Thank you for all the fantastic questions. Bye for now.